Hello, everyone. Thank you so much for joining us again for another weekly wrap-up. My name is Jeremy Cronemeyer. I'm Operations Manager for Wickham Financial Group. And I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thank you, Jeremy, and thanks for our listeners jumping back on the call. Outside of the volatility that we got on Monday, for the most part, the markets, for the most part, bounced back. So we got a pretty good sell-off, as everyone called on Monday, with some tariff talk. We saw the S&P, the Nasdaq, and Russell by the end of the week come back up, mitigate a lot of that pullback, and just down marginally. So if we're looking at tariffs and trade, the White House did announce a tariff on Canada, Mexico, and China, pulled back on Canada and Mexico, waiting a month, still in effect, and the China putting some volatility in the market. So sector performance, we saw 8 of the 11 S&P sectors gaining ground, led by technology rising about 1%. Now, that was still held back a bit by some pretty challenging earnings. I think we saw, or maybe they just weren't as good as the market expected, because we have some lofty expectations for these tech companies like Alphabet and Amazon disappointing. If we look at commodities, saw crude oil fall about 4% as OPEC maintained their output policy. Gold futures, that hit some record highs, nearing about 3,000 per ounce. We're going to look at Treasury yields. Those were lower for the week, but spiked on Friday due to some inflationary concerns. Now, with the labor market, we did see job creation was below expectations, but previous months were revised higher. Wage growth did increase. Now, consumer sentiment, that fell to the 7-month low. Some other economic data, we saw the non-farm productivity decrease, the ISM manufacturing, PMI moved into expansion territory. Global developments, going overseas, we saw the Bank of England cut interest rates, and its growth outlook, the Eurozone, inflation rose, and Germany shows some pretty mixed economic signals. Looking at this week, U.S. economic data, we're looking at inflation. We'll be looking at the CPI report coming out on Wednesday, PPI coming out on Thursday. We got Fed Chairman Powell in his testimony coming out starting on Tuesday. Now, we got retail sales being released on Friday, providing some insight on consumer spending, the pace of, if they're still willing to spend. Then we'll be looking at the appetite for the 10 and 30-year Treasury when those auctions come out. And we'll be wrapping that up with some small business sentiment numbers and some industrial production. Now, overseas, we'll be looking at basically some potential stagflation numbers, some GDP figures, inflation for the UK and Europe. Jeremy?
Gotcha. Well, Graham, I had a question for you. So now that we're getting kind of toward the end, I think I want to say 85% of the companies have put out the earnings or whatever. How do you see that went?
Yeah, I mean, we just got to gauge where we're in this earnings cycle. I think we're really towards the end here. So I think we had about 78-ish companies report, might be a little bit more towards 80 plus right now. And that many have actually beat their earnings expectations. So the average is about 75, the long-term trend, so 78 plus of beat expectations. And they beat expectations on an average, I think it's still around 17%. So I think that bodes well in supporting some of the earnings or the higher earnings multiples that this market is trading at. So again, stock prices generally follow earnings as long as we have good support in those earnings, meeting some of those expectations. It seems like the market, outside of some volatility here or there, you got to expect that, could possibly support these valuations.
Gotcha. Well, Graham, we always appreciate the information and the expertise, and thank you to our listeners. And check us out next Tuesday for the weekly wrap-up. We'll see you next time.
Take care.